Hey everybody, my name is Kyle Knott and I am not your average finance guy. We're going to talk a little bit about debt pay down efficiency today. Got a couple videos out there on elimination. In my eyes, getting rid of debt is velocity banking is the best way to do it. Check out my friends over at Pay Down Debt Solutions. They are dedicated to velocity banking and they just deep dive into velocity banking. So I'm going to send you guys over to them. If you want to know more about velocity banking, please go check them out. But this is just a way to maybe figure out which debt to pay off first. Okay, I know we all got a lot of debts out there, and one thing I came across was this debt pay down efficiency diagram. I agree with this for the most part, but towards the end it can kind of get a little wonky. But I'll go through it real quick. I think this pretty much goes through and talks probably about. It probably is in line with what interest rate you're being charged. So if you look there behind me, the debt pay down efficiency. So you've got the danger zone here is anything from 0 to 50. The caution zone is from 50 to 100, and the relaxed zone is anything from 100 to 300. Now, how you figure this out, how you figure your efficiency is you got your loan balance, whatever your loan balance is, divided by your minimum payment will give you that number. So if your number falls between 0 and 50, you need to get rid of that one right away. Caution, if it falls between 50 and 100, that's the next one we want to pay down. And then the relaxed zone, if you still want to get out of debt, I totally get it. And everything over here is taken care of. Go ahead and get that relaxed zone going. So here I kind of made 3 different examples. You can look at those. So a payday loan is likely, I didn't put any interest rates on here, but a payday loan sharks, I mean, they're just feeding on the fortunate people that are paycheck to paycheck, and no one should ever go to a payday loan place, but on every corner it is what it is. So they're out there, and you've got a payday loan. I've never had one. Hopefully, I don't think probably too many people listening to these channels probably have a payday loan. Maybe you've been there. Maybe you've got out a payday loan. Please let us know how you did that. I'd love to touch on that story. I'll be on here. We'll talk to you about it. Payday loans. In this example, you've got a $1,000 balance. Maybe you got a payday advance of $1,000 with a $100 payment, and that a 1,000 divided by 100 gives you a 10. So that would put you over here between 0 and 50 into the danger zones. Right? That's the first one. We want to knock that one out and get rid of that. So credit card, say you've got a $20,000 balance with a $250 payment. $20,000 divided by $250 gets you to 80. So that puts us in here in the caution zone. So as soon as we get that one knocked out, as soon as we get this one knocked out of the danger zone, now we'll go ahead and we'll take care of whatever we've got in the caution zone. Maybe you've got 3 credit cards. I don't know. Everything that's in that caution zone, we knock that out first or next. Got here's a home mortgage. So a home mortgage, if you got a $300,000 balance and your payment's $1,100, a score of 273. So you're up here towards the edge. That's the relaxed zone. That's efficiency wise, that's the most efficient. So what do you think the interest rates are going to be? This is likely your highest. This is likely, in my mind, still pretty damn high, and this is probably your lowest. So that's kind of goes in line, like I said earlier, that you kind of go with the interest rates and pay them off that way. But this is just another tool you can kind of use to try to decipher which one to go after first. And if you go into velocity banking, you're going to pick one. You're going to pick one, and you are going to nail it. You're going to hammer that, and you're going to get it done. You're going to get it paid off and off your plate, and then you're going to take all that money that you were then paying to say it's the payday loan first. Once you get that paid off, you're going to take that $100 and you're going to use that extra $100 that you were paying, and you're going to put it on the credit card. So instead of paying the $250, you're now going to pay $350. And once you get all this paid off, if you want to go ahead and go after the mortgage, you're going to take an extra. You're going to pay your $1,100. You're going to take an extra $350, and you're going to put it on that home mortgage. That's kind of banking in a nutshell, real quick and dirty, but those are kind of one way that you want to look at it. Now, I don't 100% agree with this efficiency, because all of us in real estate know that towards the end of your loan, you start paying a lot more principal is what you owe. So your balance will be low. So if you run the numbers, say you get this thing paid down to $50,000. So if you get this paid down to $50K, and your payments, they're going to stay the same the entire time, right? So that's still going to be, oops, 1100. So what's that? Let's bullet math in my head. So we got 50,000 divided by 1100 equals, that's 45. Okay, so that equals 45, which puts us in the danger zone. Now, in my eyes, you're getting towards the end of this loan, and most of your payment is going all towards principal. So it's knocking that balance down more and more and more, and very little is going towards interest. So it kind of depends on what kind of loan. The top two, maybe they're structured a little bit differently, but an amortized loan, you would want to, if you really wanted to pay that off, the earlier you started sending extra money towards that, which would actually end up taking you down into to the other zone. So mortgage and amortized loans like that may not work the best on this, but I still think if you follow the interest rates from highest interest rate to your lowest interest rate, or you can do like the Dave Ramsey snowball method, whatever your lowest balance is, just pay that one off, and now you got something else to push towards your other one in the velocity banking world. So either which way, you really can't go wrong. If you got a goal to get out of debt, set that goal, stick to it, and you can totally do it. So after you get out of debt, then what I would do is you're going to have all kinds of cash flow. You're used to knocking down, paying all this debt. And then once you get all that taken care of, now what? Now it's time to start growing, okay? So you don't even have to get completely out of debt. I still have a loan on my house. It's at 3%. I'm not paying that off. I'm making the minimum payments, and I'm going to do that until I move, or the next, 25 years, however long that is. So that's just me. So other people want to pay it off, however you want to do it. But I have started. I started my IBC policy, I think 7 years ago, and that's the best thing I've ever done. So I do this. I preach it on YouTube, but I do it because I know how many people it's helped, how much it's helped me to grow the wealth, and in my mind, you have to start building wealth before you pay off all your debt. Dave Ramsey is, no, you have to pay off all your debt first, and then you start building wealth. Well, by the time you pay off all your debt, you're going to be 95 years old, and now you can be dead in a year, and I'm wealthy. Great. You died debt free. But to me, if you start growing and building the wealth earlier, you can use that to pay off some debts. Or if I'm making 10 to 12% on an investment, why would I put that towards a 3% mortgage? In my theory, everyone agrees with me, and that's fine. If you want to get rid of that mortgage payment, $1,100 a month, that's a big deal. I totally get it. That's gonna help you breathe a little bit. So however you want to go, there's multiple different ways. Every different personality type out there, there's a different way we can do this. So if you need any help with your situation, I would love to help you. My email out here on the web, or the site. I'll put my email down the screen here if I can figure that out. And feel free to reach out to me. I love the strategy, the figuring out of what's what, and if you want to list out your debts and show me what they are. Some people like, hey, what do you think I should do? I will tell you what I would do, and we'll talk and figure out what your personality is and what are your goals. That's what it's all about. It's what do you want to do? This is your money. You don't need to go hire some fancy financial planner, in some fancy suit that's gonna just give me your money and I will fee the shit out of you and I will get rich. I'll buy another fancy suit, and meanwhile you might make you'll make about 7-8% is what we're gonna tell you. I'm gonna make another video on how that's not even true, but that's kind of the game. So I'm here. I want to help you guys. I want to help you. I want to help you learn about money and just a different way of thinking about it. Never taught us this in high school, and there's other ways out there that they can just accelerate debt payoff or wealth creation, doing a couple things a little bit different. All right. I hope this helps, and please let me know if you got any questions. Good luck, everybody.